As you can see in this chart here, Federal Reserve interest rate cuts are not necessarily bad for the US dollar. In fact, the last two times the Federal Reserve cut interest rates this year, which was the only two times that they cut interest rates, the US dollar actually rallied. Why? I mean, let's take a look at the charts. This chart here you see was the October interest rate cut. You can see in the dollar index that the Federal Reserve cut interest rates, and that pretty much marked the bottom in the dollar in the near term. This was because we had one member vote for 50 basis points, one member vote for zero change at all, the rest vote for 25 basis points. And that told the market, and Federal Reserve Chairman Powell confirmed later on, that there's a lot of division within the Federal Reserve and that they basically had no idea what they were going to do next. So the market interpreted that as a hawkish cut. In September, that was their very first interest rate cut in this entire cycle. And you can see in this chart here that in September, same story. We did not necessarily see a sell-off in the dollar. The dollar ended up rallying. So given that this is expected to be the last interest rate cut before a pause in January, maybe even longer, chances are that the dollar will rally once again after an interest rate cut. So it could be 3 for 3. But the bottom line that I want you to know is that an interest rate cut is not necessarily bad for the dollar. In fact, there have been countless cases where the dollar have rallied after a rate cut, and you need to be aware of that. I'm Lien with BKTraders. Like, subscribe, and follow my channel for more updates on how to trade FOMC.